Welcome back, everybody. Today I'm doing my top three option plays for the week. We got a few good ones in here. First off, we have Zoom. Zoom has been trading in a downtrend, but before I look at the chart, just kind of want to show you something that I thought was interesting while I was doing some research for my ARC video. And I found this website, kathyshark.com, and they track all the positions that Kathy puts on and try to predict, or they try to figure out how much of a stock the Kathy trades and tries to follow them. But this chart basically shows you that they've been selling out on like bigger positions like Tesla and buying the dip in others such as Zoom. And if we click on this, this is actually what I thought was really interesting, as it plots the amount of shares that the ARK fund has held, the cost average based off the close price, and the price of the stock. And it's just interesting to see that right now RK is adding a lot more shares of Zoom, so they're buying the dip drastically here. Their cost basis is, what is that, 328, and right now you can buy the shares for about a buck 50 or 150. So they're buying the dip, so can we not sell the dip? And that's why Zoom kind of popped up on my radar for this week. And now if we go ahead and look at the chart, go ahead and put this on full screen. uh Actually, we're in a pretty big downtrend here. It's been going down despite beating earnings repeatedly. It continues to go down. Looking at the 1 year chart here, you can see we're at 52-week lows right now. So that's something to look about. Another thing is that we do have earnings coming up on March 1st. So this is one that I'm actually willing to do through earnings, which has been a rare staple for me. Going back 2 years, looking at the volume profile, you see we should get some price action around 145, 150, where it should like just kind of trend in for a little bit. If it continues downwards, it could just shoot back up. I'm starting to think that it might be a little oversold. RSI says it's oversold, obviously. Uh, I would like to see implied volatility be higher than where it is right now. If you look at that 2 year chart, but if we go back to the, actually before I go back, uh, so obviously I already talked about 150 being a spot where it can be trading a trend for a little bit. If it does bust through that, again we have another volume spike at 120 where it seems to have been trading for a long time. So just those are just two levels to think about if it's going to continue going down. But that's going back 2 years. Like they've acquired so many more customers through this whole pandemic thing, and I don't see how they could be trading at these levels at this point in time. Sure, they're not a 588 stock, but they're not a $70 stock anymore either. So what I'm looking for is about a month out, February 18th, and I'll just be looking for like a 1% return. This closes before earnings, although we might see the price run up or down because it's coming up on earnings. I'm looking for just a quick 1% return, and that would be Zoom at 120, $124. 124 divided by 120 is a little over 1%. So if you can get filled for over a buck 20, you're making 1% on your money in 32 days. And again, 120, as we went back to here on the 2 year chart, you saw it has to break through two huge volume spots to get down there. One's at 147 and then 120. So if we do get put shares, I think we'd be at a level that we could sell covered calls at that point. So it could be a nice, easy $120 that you get for doing Zoom. All right, next up we have Spy, and this is more of a wait and see if the opportunity presents itself to get in. Basically, what I'm thinking Spy might do is we might come back down here and test this 452 level. If we get down to this area here, I think it's just going to go right back up. So I'm debating about buying some in the money calls. If Spy gets down to 452, I'll buy some calls and then sell them when Spy bounces back up to like 468. Like there's just a huge area for it to run. I think it runs through this area pretty quickly. That could be some easy money. This would be something with like some shorter DTE contracts, and I'd be buying premium, just trying to capture that potential gap up here. So that's another thing that I'm looking at. It's not a theta play, so take that what you will. I'm usually a theta player, so this would be a bit more of a risky play if you have to put my style. You had to classify it somehow. So the last one I'll be looking to see if there's an opportunity is AAL. They have earnings on the 20th, which I think is Thursday. If they bottom out a little bit and get below like 1650 or so, like the $13 puts might have some premium in them. So I'll be looking to go out about a month, maybe 39 days, just to spread out my expirations. And I'll be looking to see what the premium looks like here. And if I can get 1.5% for trading in this range, assuming like AAL goes down to like 1650 or 16, then that's probably what I'll end up doing. So if on earnings it shoots down and these premium goes up, I'll be selling some puts in this area here. And that kind of wraps up this video, guys. I hope you guys stay safe next week, and see you later.